So hello to Facebook. I'm going to adjust this real quick. We're a little tipsy. There we go. That's that. So hello to everybody on Facebook. My name is Kellyanne Worthington. I'm a branch manager and senior loan officer with Liberty Home Mortgage. I want to thank everybody today for coming to our lunch and learn. Today's topic is condo regulations, as well as learning how to prepare your buyers, your listings for condos. Ever since the condo collapse in 2021 down in Florida, there have been a lot of regulation changes and updates, and so we thought this would be a really good opportunity to answer some questions, go over, the difference between a limited review and a full review, and go over what is a spot approval, what is an underwriter looking for with documents that are turned in, how do I make sure that my listing is eligible for different loan types, because so often you've seen it before, I'm sure, as realtors, where it says a condo is FHA, that they'll accept FHA offers, and then you find out that it's not FHA eligible, right? So we're gonna go over all those things. For anybody watching on Facebook throughout this, unless my phone dies or shuts off at some point, if you have questions, feel free to put your questions into the comments below, and later today we'll go through any of those and answer those questions. And for everybody here, like they said, we are able to answer questions throughout it. You can also, at the very back of your not homebuyer booklet, your lunch and learn booklet is a Q&A section where you can jot down notes. These are yours to take home. You're also going to get another package in the mail in a few weeks that'll have some extra stuff and another copy of this without notes on it, so don't be afraid to circle and write things down, etc. Like we said, Michelle, Chief Operating Officer, and Amber Gowdy, CEO, are here with Liberty Home Mortgage as well. I'm going to talk about some of the external things. They're going to talk about some of the internal things, and I just appreciate your guys' time, so thank you so much for being here today. Okay, so if you open your booklets to the first page, the first topic I'm going to discuss with you guys is what types of loans work with condo purchases. A lot of realtors, especially when they're new, aren't aware that not all condos can do all loan types. Okay, so for example, it is going to be very rare to find a condo or townhome that is, for example, FHA eligible. It's very limited. It isn't that FHA doesn't want people to buy condos, it's just they have very specific requirements for what they're going to allow condo-wise. So if you look at your folder, there's 2 QR codes here, and I'll email you the website links as well to your email addresses after today. But there are specific sites for FHA for HUD, okay, as well as for the VA, that you can go and check to see if a condo is FHA eligible or VA eligible, okay? Outside of that, for USDA, that's one where you kind of have to check with the lender, because there's not really, is there an external way for realtors to check? No. So I actually just had one in Athens, Ohio. I have a realtor down there that I work with, and he had a client who wanted to go check out a townhome, which is very rare for USDA to be in condo areas, but this area did have one, and it was USDA eligible, but the lender has to check on that for you for USDA. Conventional, as we know, is the typical loan that needs to go for all condos. So when you have a buyer, so let's talk about buyer front facing first. If you're a realtor that has a buyer and you know the buyer is interested in condos, you need to let your lender know that. Or if you aren't partnering with the lender and working with them, or you have a lender who's not communicative, you need to make sure that the buyer is communicating to the lender that they want to look at condos. When you have a pre-approval letter, you want to make sure that on the pre-approval letter, it says that it is for condos as well as single-family homes. Because the reason is, condos have different underwriting, so they have to be approved to buy the condo through the automated underwriting system. It also has, you have to factor in HOA fees into the debt-to-income ratio and the housing expense ratios, and that can drastically change somebody's purchase price capability of what they can afford versus a condo versus a single-family home, okay? So for example, if you have a client who is approved for $250,000 for a single-family home and they're at their max ratios, they're like max debt-to-income ratios, if they want to switch to a condo, that number is going to come down, because now we have to factor in that HOH fee, which I know it doesn't seem like 100 or 200 or 300 would make a big difference, but it makes a huge difference on what they can afford purchase price wise. And it's sometimes 20 to 40, even more, $1,000 difference of purchase price, okay? So typically you just, on buyer side, you want to be very aware. It's also helpful with realtors, and that's one thing I always like, educating realtors and working with realtors together as a team instead of individuals, so that we can both prepare a buyer to understand that a condo is going to be a different experience of buying, it's going to be a different purchase price, those sorts of things, so that they have realistic expectations and understandings. On the listing side, same thing. When you have a buyer who wants to list a condo, the very first thing you're going to want to do is find out what loan types you can accept for that condo, okay? So, you know, check with the lender, or check with the lender you work with that you know you can call. For example, all of you, I hope, know you can call me anytime, even if it's not a deal that we're working on. I am happy to help you answer questions in any way that I can for anything that you need help with, okay? So that's kind of the, in regards to loan types. Do you guys have any questions in regards to that? Good? Okay. So the next thing is, what determines a limited review versus a full review? The biggest thing is down payment, okay, when it comes to conventional. So for conventional loans, 10% or more down means that you can start, and that's a key word, start with a limited review instead of a full review for a condo, okay? FHA, USDA, and VA all require a full condo review, not a limited review, no matter what the down payment is, okay? And we're going to get into kind of what the differences are of that in a minute, but that's the biggest thing to know. So when you hear people go, well, this person didn't need all this documentation for the condo, I get that all the time. Well, this condo just sold a property like a week ago and they didn't need any of this documentation. Every buyer is different. Every loan type is different. Every financial situation is different. How that condo operates. We had one where a condo had a different, whole different property management company that they had worked with the year prior when they sold one, versus who they had now, and who they had now didn't want to do their job, right? That could make a difference in you getting a condo sold, right? So that's the biggest thing though, is your down payment percentage for conventional, 10% or more, you have a limited review to start. And then under 10% is a full review. FHA, USDA, and VA all are full reviews. Okay? And by the way, correct me if I say anything wrong. You can interrupt me. So, what is the difference between a limited review and a full review? So, a limited condo review is drastically different from a full review because of the decrease of documentation that you need from that condo development, HOA, or property management team. Okay? So for a limited condo review, and we gave you guys these forms, so you're going to see one is just a nice front and back. This is what a limited review questionnaire looks like. And even though it's logoed with our logo, okay, and it's called Liberty Homeowners Association Questionnaire Limited Review. So even though this has our logos on it, I want to be very clear that it doesn't matter what lender you go with, this is the questionnaire. We just brand it with our branding for you guys so that you can see what it looks like and what you're going to need, okay? So this is one of the most common things I get told to me is, well, this lender didn't need this. Well, yes, they do. They do. This is a government-regulated document, and these questions have to be filled out in full with answers to every single one, okay? So this is a limited review questionnaire. The other one that you can see that is multiple pages, I think it's like 8 pages long, and it's called Form 1076. This is the full condo review questionnaire. And again, even though it has our branding on it, this is directly from Fannie Mae and Freddie Mac. This is their full condo review questionnaire. Okay? So these questionnaires, when you hear that you have a condo with getting the questionnaire sent to the HOA or the property management, these are the forms they're getting. Okay? And these are the forms that have to be filled out legally for the loan to close with the loan. Okay? Cash buyers, doesn't matter. That, we have nothing to do with that. So I don't know, I'm guessing they don't need any, right? If they're buying cash, they're taking the risk on themselves as the buyer. But for anybody that is getting a loan and borrowing money from the federal government to buy a home, those are the two forms. One of those two are going to have to be filled out. Okay? So for a limited, yeah, go ahead, Dan.
Filled out by the HOA manager?
Yeah, so we're going to get in, that's a great question. So HOA manager, president, treasurer, anybody that is allowed as the HOA board to fill it out can fill it out. So it does not have to be the manager. It could be the president. It could be the treasurer. It just has to be a board member that can fill it out and put their name and signature on it. Okay? They also might have a property management company. And we're going to get into that a little bit in a bit, but some of these condo associations recently have hired property management companies to take over handling all of this. I will tell you, it's very important to be aware of how this condo is going to operate for you as the listing agent on your listings. And you want to know who you need to be dealing with and how they, and make sure they are ready and understand that this is required for them to do. Well, we'll get into that. I don't want to get sidetracked too much, but yes, Dan, to answer your question, it can be any board member of the HOA, or it could be a property management person that's hired by the HOA to fill out the form. We don't care, as long as we know who filled it out and they're signing and dating it and their title's on there, etc., and we have their contact info, they are allowed to fill it out. It's also important to understand, just like clients can't do their own verification of employment, lender, like myself as the lender, I've got to make sure my processing team is on the communication to get this information. It has to be valid, right? You have to prove it's not fraud, that it's being filled out correctly, so it's important to know that. But I've had listing agents get on board and jump in with difficult property management teams and work with them. So you are allowed to get as involved as you would like to help your listing sell and close.
So if there's a fee associated with that?
Yes.
Is that permissible for the buyer to?
Yes, 100%. And we're going to get into that in a second. But yes, so there is a fee if they do not give us the documentation, which we'll get into in a minute. There is a lot of them have this company called HomeWise, right?
Third party.
It's a third party organization. If your HOA, and this is something to also be aware of for listings and buyers, if the HOA or property management team refuses to give us the documentation that we need, and we have to go through HomeWise, your buyer has to pay for it.
Is that a requirement the buyer must pay for it?
Yes. Now, can realtors pay for it or sellers pay for it? They can. Okay, so we could send the payment link to a seller or a realtor. Same with appraisers, right? So we can have, I've seen realtors help with the second appraisal to help a buyer, etc. So yes, so it doesn't have to be the buyer, but can it be an outside person though? It has to be one. Could it be a family member?
It could be outside, but we actually need a credit card off because they won't send a payment link for us. So we would actually require a credit card off.
Oh, that's good to know.
For that.
Okay, so we have to have the form filled out no matter who pays for it,
Yes,
unlike an appraisal.
Unlike the appraisal.
Okay.
Yes.
Yes, so just so you know, appraisals, we can send a payment link to anybody to pay for an appraisal where they can pay right online, but that's good to know. I didn't know HomeWise. So there is a form that I have pre-made for all of my clients. So when you work with me to be preemptive, I always have a buyer fill out a condo questionnaire authorization form for their credit card that we keep on hold for them in case we find that situation happens, to not delay the process of getting those documents. But if you're working with a different lender who isn't proactive and reactive instead, they would then ask your client for that at that point. Yes.
Is there like a typical cost to that?
At $385 or $395, I think.
Yeah, it varies depending on what we need, but the top typically is $395.
So depending on if it's limited or full review,
Yes.
the price could, but the highest I've ever seen is $395
Yep.
from HomeWise. Great questionnaire.
Mm-hmm.
So with the limited review, we need the limited questionnaire filled out, and the only other thing we need at the start of this when we get that questionnaire requested is the master insurance policy for the condo association. So not the insurance policy for the seller on their property, right? Not their homeowner's insurance, but their master insurance policy. It's essentially the insurance policy for the entire development. Okay? And it's important to note that each loan type has different requirements for what that master insurance has to show and cover. And there's no way for us to tell you if it has it or not until we have it and we have the underwriter review the insurance master policy. Okay? But with a limited review, those are the only two things we need. Okay? Yeah.
Recently had a transaction last month in Lakewood where the insurance was for cash value instead of replacement value. And the HOA board and their attorney refused to change it. Completely killed the deal.
Yes.
And so really you can't get a loan on that building. It
You would
has
only
to
be able to be a
cash
cash buyer. So we actually just had a situation like this. Do you want to address that one? I think it's an example. If you go to Adams, yeah. So if you go, I believe we put it in the book here. Give me 1 second. Oh, maybe they didn't put that one in there. It's right here. Oh, there we go. Okay, so if you look at the page, oh, they're not numbers, page 7, where it says, what is an underwriting looking for on the condo questionnaires? So recently, and I'm just going to read this for those that are watching on Facebook. Hi, Kelly. I live and sell as a realtor at ABC Condominiums. I just changed the name, so we didn't have that on here. And in Building 6, where I live and have listings. The building is insured through our HOA master insurance policy at a replacement cost of $57 million, which matched our appraisal until we had a new appraisal done mid last year. The new appraisal is at a replacement cost of $63 million, giving us a shortfall of just over $5 million in our master insurance policy coverage. In April, the building will purchase a new insurance policy at the new replacement cost. The issue is that banks are refusing to offer mortgage loans to buyers because of the shortfall. Is this normal? The shortage happens every 2 years when a new appraisal is mandated. How can my buyers get around this? Can you assist with education on this? So would you like to answer?
The short answer to that is there is no way around it. If that's their policy to have their building reappraised every 2 years, then they have to also update their policy to update their insurance coverage as well. So basically to sum that up is they're getting higher value for their building, but their insurance isn't enough to cover it, God forbid, if it were damaged. So there is no way around it. It doesn't matter who you are.
It's just the way it
That's
is.
just
So
what
yes,
it is.
cash in that situation, cash buyers, if you know that about that listing, which again, these are great things to be aware of so that you know, like, are we only going to be able to accept a cash offer? That way you don't have people accepting offers and then getting loans denied because of it. That's a situation where because they refuse to do that, then you know you can only accept cash offers for that.
That's a very unfortunate situation.
And so for this specific client, they just every 2 years have about a 4-month time frame where anything sold in that 4-month time frame would have to be a cash buyer unless they get their appraisal updated until that appraisal. So really you want to, not that it matters to us, but for condo associations, they really should time their appraisals with the renewal of their insurance policies so that they can both update at the same time. But as we have all come to learn in dealing with condo associations, they're not aware of these things, and so they just do them whenever, not realizing that that could cause issues for their owners when they go to sell properties. Yeah, did somebody else have a question? Yeah, Kelly.
I do. I've got a building I sell a lot of condos in, and they've got a really high assessment. I mean, really high assessment. The last one I sold, there was the HOA and assessment combined was like $1,500 a month on a 2-bedroom condo.
Yeah.
So in advance, when I list a property, sometimes I'll have the seller pay for the lender questionnaire in advance, so I can put it on the listing because it asks all those questions of, have there been any financial hardships within the last 2 or 3 years, whatever.
Right.
So that way we can at least show upfront the finances are sound.
Right, yeah.
Now, because the seller paid for that upfront and you guys weren't part of that communication, can that lender questionnaire be used or another one has to be bought? Like if you stepped in, like let's say that was purchased by the seller to begin with, then, it comes down to if somebody with a loan instead of cash is buying it and you need the lender questionnaire, can you use that one that the seller already paid for?
We actually have to obtain all of our documentation through third party.
Got it.
Meaning it can't come directly from the buyer
Sure.
or seller. It's conflict of interest, unfortunately.
Okay.
Now, they could provide that to the HOA, and we could have that contact and say, hey, Mr. Smith, would you please send that over?
Great workaround.
So there are ways around it
Okay.
that are still ethical.
Yep.
But to answer your question 100%, it's the same thing as if we ask for a verification of employment. Obviously, I can't go get it from my employer.
Sure.
The lender needs to reach out and do their due diligence and make sure that it's done properly. But to answer your question, there are ways around it.
Okay.
And same with an appraisal, Kelly. So unfortunately, like we've had sellers who want to kind of know the value of their property prior to listing it. So they'll go and buy and pay for an appraisal, which is totally fine. But then they want us to use that appraisal for the loan. And unfortunately, we are required to order an appraisal through the third party. And a lot of people don't realize this, but lenders are not allowed to communicate with appraisers. So I have a lot of realtors go, well, who are your appraisers? We don't have appraisers. We're not allowed to have appraisers. So our appraisers are ordered through a third-party management company. Now we have an appraisal management company we work with that we can communicate with if we ever had an issue. I think in all of the years that I've been a lender, I've only had one situation where we had an appraiser that I felt was being very unprofessional and unethical. And we reported that appraiser, right? So we can report things, but we can't choose who an appraiser is going to be. We don't get to choose our appraisers or talk to appraisers, things like that. So that's a great question. So thank you for those questions. That's awesome. Okay, so let's go back to page 3. So a full review, okay? So if you do not start at a limited review, so remember, a full review would be required for FHA loans, USDA loans, VA loans, or any conventional loan under 10% down. These are the documents that the government requires us to get from the HOA Condo Association for a full review. So the first one is, again, that condo full review questionnaire that you have a copy of. The second is the financials, meaning the money in and the money out that's going on, as well as the budget. Now, sometimes they combine these all into one document. Sometimes they're separate documents, okay? And Michelle and Amber gave a few examples of budgets that they're going to likely touch on as well. You also are going to need the full past 12 months of meeting minutes of the condo association. And they need to be approved, meaning they need to have a signature and date on them of somebody from the board. So we can't get a blank copy that doesn't have any acknowledgement on it because we don't know where that came from or who approved it or if it even was approved or if it was just typed up the other day, right? Now, let's say you have a condo association that only meets once a quarter. That's okay, but then we need all 4 quarters of meeting minutes, okay? So we have to encompass a full 12 months. Now, the one question I believe I asked you before, and I don't remember the exact answer, but what happens if you have a condo association? So like the condo that I owned a few years ago had 1 meeting a year. We didn't have quarterly meetings. So what happens if you only have 1 annual meeting for an HOA?
That is 12 monthly meeting.
Okay, perfect.
So it doesn't mean that the condo is required to meet every single month. It's very common for them to meet quarterly or semi-annually or things like that nature. Has anybody heard, we've all done condos at some point, I'm sure. Has anybody heard a lender requesting meeting minutes? I think that's a really important, okay, no. So that's a really, really important fact that we want to drill home here today, just for your education purposes.
And this has been something that's been more prevalent since the condo
Yes,
collapse.
since the condo collapse, they have, as you can tell from all these questionnaires and paperwork, they have started to ask a lot more questions on, they not only want to know about the safety and soundness of the actual condo itself, but they also want to know about the financial wellness of it, okay? So what they're looking for is, if these questions aren't answered to what they deem acceptable, and we can go through that when we start going through the questionnaires of some things that would want to stick out to you, we have to then go ask you guys for meeting minutes. And then it comes into play of, well guys, to be honest with you, as you can imagine, there's probably at some point going to be something that we should not want to see and do not want to see in those meeting minutes. But unfortunately, if they are unable to complete these questionnaires correctly, it's a requirement of Fannie, Freddie agency to ask for those things because they want to know what they're discussing in those meetings. They want to know if there are safety issues that haven't been addressed, if there are special assessments coming, if there are, if there is a pending litigation that they didn't disclose somewhere. So those are kind of like the big ticket items that we would be looking for in those meeting minutes. Personally, I'm not a fan of looking through meeting minutes.
We don't want to look through them, just so you know. We try to get around looking for them if we can.
9 times out of 10, there's information in there that I'm like, oh, jeez. But if they don't complete this correctly, and if they're not keeping up as an HOA in itself, unfortunately, it's just a requirement. You know, I don't obviously make the rules, I wish I did, but.
Right. Thank you. And then outside of that, like the limited, the master insurance policy, any recent inspection reports. Now, are we going to request those immediately? No. So just like the meeting minutes, these are things we would most likely have to ask for depending on what's on the questionnaire. So if in the questionnaire they're identifying that if they answer no, one of the questions is, have you had inspections done in the past 3 years? And they answer no, we are going to immediately ask for when the last inspection was done and need a copy of that inspection report. Again, this is to protect the buyer from buying into a property that could have major safety issue damage to the property. So that's important to know. And then HOA rules and regulations and HOA declarations and bylaws. So rules and regulations are the guidelines for the unit owners. The decks and bylaws are the guidelines for the entire condo association. Now, sometimes these will be all in the same document, and sometimes they will be separate. So you just kind of have to look through them to find out, do they do both of them together, or are they separate? So with that being said, a few things to keep in mind about this. Number one, well, one I already went over, the regulations and stuff can be the same, limited or full reviews. So when they're filling out this questionnaire, they cannot leave it blank. Okay, now this has been, and I will just prepare you, you need to have real conversations with your your seller, and they need to have a real conversation with their property management team or their HOA board. You cannot leave it blank. It's not optional. They don't get to say, I don't feel like it, okay? The loan won't close. So you can't leave it blank, you can't put NA. I had one property management company put, we were advised by our legal team to not answer this question. That's a big red flag, and you don't want to put that on a document. So these questions are all yes or no's. As you can see, right, yes, no. Have you had inspections in the past 3 years? Yes or no, right? You can't put unknown. Well, we need an answer. If you don't know the answer, it's okay to ask other people in your board for answers, right? Property management teams need to be working with their HOA members to make sure that they can be on clear communication of what's going on. So those are just very big things that can cause very unnecessary issues. The other thing that when I said started with for limited reviews, the reason I quote started with is when they fill out this limited review, right? It's only 2 pages, right? Simple and easy. Depending on what is answered on this, there may be other documents that we then need to get because of this. So you never want to tell a buyer or a seller, oh, they're just going to have a front and back and then we're done, right? It's never done until we say it's done. And I don't mean that in a bossy way. I mean it in when we give a clear to close, I always tell my buyer, just because we have a clear to close doesn't mean you own a home, right? Don't go change your job this week. Don't go buy all your furniture for your house, right? We had a seller once who didn't tell us that he had a private loan with his mother to get the house, and the day before closing, the mom showed up because she saw a for sale sign in the front yard and showed up to the son and was like, you owe me $100,000 to the seller 2 days before closing. And he hadn't disclosed it to his realtor, right? So these things matter. So just like with a clear to close, and you don't own the home until it's funded and you have the keys, just because a form is filled out doesn't mean we're done, right? And so I just say that because I think if you, again, I'm proactive, not reactive. I want people to know what to expect so that there's not a surprise of well, I thought you said you got the questionnaire back. Well, we did, but then it has to get reviewed, and we might need to ask for more things based on. So those are just things to be aware of, is that sometimes because of what's on there, we might need to ask for more things, okay? Any questions on the limited and full review basics? Good? Okay.
Is there any limit to what a realtor should be involved in at this point?
So yes, so let's talk about that, because that was one of the other things I was going to cover. So when it comes to getting involved, the biggest things I think you can do as a listing agent is work with your seller. I would genuinely go meet with your HOA board or property management company. Once you have that signed listing agreement and you know you're going to be the listing agent, you now have a reason to ask, let's go meet with your HOA. Let's make sure we've got our documents together. Let's make sure they know where their master insurance policy is. Let's make sure to show them the questions that they would be asked and find out, are there anything, that we need to be aware of that are potential issues with this? Because that will let you address things ahead of time with your seller. Also know, do we need to just ask for cash buyers, right? Are we going to have major issues with getting a loan buyer? Because I know as listing agents on condos, you don't want a buyer to go and spend money on inspections and appraisals and have a loan denied. Your seller doesn't want to go through that process. So it's better to, sometimes we don't want to see the boogeyman behind the closet, but it's better to know those things ahead of time. And there's no reason a seller shouldn't, I think a seller would feel more comfortable knowing that you know what you're looking for and talking about to make sure that they have the smoothest sale process that they can have and that you're educated in selling their condo, right? And that was one of my hopes for doing this with you, is to make you feel more empowered when listing a condo and taking on a client that has a condo listing of what you need to be aware of. You can't get us documents, Eric, but you can get us the contact information. So that's one of the biggest things I think listing agents can do for the lender, is automatically, as soon as you know who the lender is, either if the lender isn't communicative, because I know I'm probably over communicative, but if they're not reaching out to connect with you as the lender to the listing agent, send it to your buyer's agent of the accepted offer and have them get it to the lender, right? So we want to know, who are the contacts? Who are the point of contacts? What is their name? What is their phone number? What is their email address? And where are they in this, right? Are they the HOA president? Are they HOA treasurer? Are they the property management company? If a property management company, what position do they hold in that property management company? And what is the name of the property management company in case we have issues? I would say HOA boards tend to be a lot more helpful than property management companies, which is silly because property management companies are actually getting paid to do this job that they don't want to have their hands in. But that's a discussion for another day. But those are the things you can do to be proactive in helping your lender. We want to work together, especially with me. If you work with me, I don't care if you're on the listing side or the buyer side, I want to have a smooth process for everybody. It has your seller come back, your buyer come back, it looks good for everybody, and then we all make more money, right? Because we do a good job, and then they have a great experience, and they recommend their family and friends to you. That's why you want lenders that work as a team with you so that you can have clear communication, know what's going on. The other thing I, as a lender try to do is I express how important it is for a condo association or property management company to get us the information immediately when we ask for it. We just had a situation, and unfortunately the loan was not able to close. They had to go with cash. But what happened was we got a deal for a condo December 18th of 2024. As our job, we were on it. So the second we started the loan and it went into intake, the processing team immediately requested and reached out to the contact that we were given and said, hey, here's the information we need. And this was a limited review, not even a full review. We didn't hear back after 2 days. I immediately notified the buyer's agent and the listing agent, listen, it's been 2 days and we have zero communication. A week later, still no communication, let them know again. They're like, well, we think they're on Christmas break. So if you're selling during holidays, always be aware of the holidays that are around your closing date for multitudes of reasons, right? Title companies, lending companies, property management teams, appraisers, all of that. But so it continued and it continued. We're now at the 16th of January. So this actually had a longer closing than normal on the contract, because normally I never need more than 30 days. They had given 45, whatever. So it was supposed to close it on the last day of the month, and we're at the 16th, and we still have no communication. And the buyer's agent and listing agent are aware of this. They're reaching out, still no communications. 5 days, I think it was, before closing, they decided to send us the information, and it was a cluster. And I'm guessing that's why they didn't send it to us, because they knew that there were going to be issues, and they just didn't want to deal with it. So the problem is, the longer they take to get us it, the less time we have to problem solve, right? Because our job as a good lender, our job is to problem solve. It's to find ways to work with it, to find people to work with, and work together to get this done for everybody, right? The longer and longer they wait, the less and less time we have to problem solve. And then things get delayed. And then, as it always happens, those are the deals where you have like everything's turning around. They've got a house they're buying and they've got a house they're selling, and it's always those, right? So just making sure that they're ready to communicate, making sure they're ready with their documentation, those are things that, you know, can make a big difference. And then making sure you work with lenders that are communicating to you when they reach out to them, what their follow-up is with them to make sure you're getting the documents that you need. Okay? Yes.
How nice it would be if we educate ourselves better as well, not just for your sake, but for courtesy for ourselves, as well as this young lady who showed a condo and couldn't sell the condo, but the listing agent would have had knowledge to call and say, hey, this is going to be a cash only.
Right.
Would have saved her a lot of time and aggravation and respect from her buyer.
Right.
I think that's probably one of the biggest things that we see on the agent side of things.
Yeah.
And I think when Kelly said, would you guys, you know, sit on a panel with us to talk about condos to agents, we were like, absolutely. Because, you know, I mean, I know it's not really fascinating stuff here, guys, but, you know, if we can help you guys, even arm you with a little bit of information that can help you with a deal for a client or a referral or a listing, and you feel more secure, or maybe you know what questions to ask the listing agent to at least, you know, get a jump start, then, you know, you're 10 times ahead of most people. Because I'll be honest with you, I think the majority of agents that we talk to behind transactions, when there is some sort of issue on a condo, I think the most that we hear is, well, this just sold 8 months ago, so what was the problem then?
Yeah.
And I use that as an opportunity to not get frustrated, which obviously you guys can imagine that's frustrating. It's like, okay, well, that's great, but explain to them why. Here's what could have changed. Actually, I'll give you an example. It was specific. We had a deal that our owner of our company had from one of his agents that sends him business nonstop. And they trust us, obviously, because we're very open and communicative. So they send us this condo. It gets into underwriting. We look at it, and we see an automated system. So if any Fannie and Freddie condominium conventional financing, it's ran through their system on their end as well. And it will either say it's not been reviewed yet, approved, or denied. Meaning that Fannie and Freddie themselves at agency have either reviewed it and approved it, there'll be expiration dates and such, or they've denied it and they will list a reason of denial. So the very first thing we do in underwriting is run it through that system. It comes back, they just denied it. So they just denied it while we were under contract, meaning it must have gone through a prior transaction a few months prior, and they found something they didn't like, and now that condo project is denied. So of course, what does that leave to us? We as the lender, everybody's in panic mode. They're like, well, what are you talking about? We just had this deal done, like not even 2 months ago. And I said, understandably so, but here's what happened. Fannie Mae now found out that this doesn't meet X requirement. They now marked it ineligible in their system, which means me as the lender, we can't do anything. So long story short is there's always different things that could come up, but I think we can be proactive and at least, maybe you're not sure, I mean, this is a lot of information to cover in an hour period, guys. But at least you can say, okay, you know what, we talked that day at that meeting, let me give Kellyanne a call and just ask her about these 3 things specifically. Or maybe I can ask her of what I should ask the listing agent or what I should ask the HOA management company.
Or we see that this might be an issue after talking with our seller and the HOA. What can we do to be proactive to get some sort of inspection done or like something done? Yeah, Cal.
So say I have a listing and I just want to make sure I've got good information to begin with. Can I call you guys and say, hey, is this building eligible for evasion?
100%. Yes. You are never bothering me. 8 days a week. I created a new day. 7 days a week, 8 a.m. to 10 p.m. You're never bothering me, ever. So if I don't care if it's a listing and it's not going to do anything
It's
for
a
me.
phone call I took yesterday.
Right, like I'm here to help.
It
So
wasn't our deal.
anything.
It
Right.
was a listing agent that, you know, has a good rapport with us and said, hey, here's what I'm being told from the buyer side. Could you guys look into this for me?
Get those
It
questions
took me
all the
all of maybe tops an hour. I said, well, this isn't a definitive yes, because obviously I have no paperwork to review.
We can't see the file.
But I was able to go do some due diligence and research that led me to believe that at one point in the last 3 years, this was approved. And there's no other comments to lead me to believe that there was otherwise something negative happening there. So that showed me you have a chance here. So if you'd like me to review it, you'd have to send me all of the information.
We would have to
of
see the
course.
file at that point, but for basic approval and
But of
stuff like that,
course.
in a heartbeat.
We can use all of our tools and all of our information, guidelines, all of our tools and resources to help you at least get you at least 80% of the way there, you know, without reviewing all of that.
So you said you'll need all the information to get a definitive answer. Will the lender questionnaire work? Like, will that be enough info, or you would need all the
Depends on-
minutes and everything?
well, again,
It depends
every
on the
situation's
situation.
different.
If
Yeah.
they're saying that it's a master policy issue, I need a copy of that
Yeah.
master insurance policy. If they're saying it's a special assessment issue, that's pulling from this questionnaire.
Sure,
Show me what the special assessment is.
sure.
You know, is it related to safety and structural issues? And I think that's as you get into the questions, we can elaborate to you guys the big crucial questions of how they're answered and how that could affect you on your end of the deal. But anytime, if you have a listing and you're like, the buyer couldn't be sent to Liberty, you just want that knowledge, please reach out to Kelly. And Kelly, if she doesn't know, will always reach out to us. She has a direct line with us. And
I have never a problem to say I don't know the answer to something. I will never give you an answer unless I know it's the answer. So I know sometimes people like to act like they know everything. I don't believe in doing that. Nobody knows everything. So if I know the answer, I'll give it to you. If I don't know the answer, then I will say, you know what, let me just double check on that. Let me get the answer for you. But you're never bothering me, ever. So just reach out anytime. Okay, so Amber is going to talk about HomeWise and kind of quick base on what that is, and also spot approval. So a spot approval is when you're going FHA and it's not on the approved list, but you want to try to see if you could do that specific unit as an FHA condo, which you might not know is a potential option. So go ahead. Thank you.
So HomeWise, we talked briefly on it. That is one of the third-party verifiers that we use for the HOA condo docs. What we always do first is we reach out to the HOA and we ask them, hey, can you fill out these documents that we need? Usually, well, I can say usually. Sometimes they say yes. Not that often. Usually I use this website, it's called HomeWise, and it's not always HomeWise. We're using that because that's the majority of what these condos use is HomeWise. But there are a few other verifiers that are out there as well, like Condo Tech. There's that one company in Florida uses, it's a big condo, so we've had to use it a few times, but it's really strange. So like, there are additional ones as well, so it's not just HomeWise, but our goal is to try to not use them because it costs our borrower, costs the client. We don't want to do that. So if they're willing to work with us and they're willing to fill out the paperwork and give us what we need, we prefer to work with the management company or the HOA. But if they don't, they're not willing, then we use HomeWise. The thing with HomeWise though is the HOA is not usually willing to talk to you at all if they're using them. So we have a lot of issues with that, and a lot of the times they just fill out a huge form with all the questions on there, the HOA does, and they give it to HomeWise. So HomeWise just goes through there, marks off what we need, and then sends it back. They're not really willing to work with us either. So it's like, okay,
They sometimes
you
get
use
stuck
them.
in limbo between the two.
Yes, you use them, you want us to use them, but you're not willing to work with us, and neither are they. So what do we do? You know, so then we're like, that's where we would
Out of
rely
state
on the agent to help us step in there. You know,
Yes.
if we're not getting good answers or we're not getting any communication,
Right.
we have done that in the past quite a bit. Reached out to the agent and said, hey, could you step in here and try to get us some communication or get us a direct contact?
Yes.
Because this is what we're encountering.
Yeah.
Because sometimes we'll have the questionnaire from them, but then again, if the questionnaire shows that we need something, and HomeWise goes, well, this is all we have, this is the only documentation we have, and this is all we can give you, and that's it.
yes.
We have to then go back to the HOA and be like, okay, well, they did, because they go, always, they go, well, we told you to go to HomeWise. Like, yes, we understand that, thank you. We went there, we got the questionnaire back, but because of what's on there, we now need X, Y, and Z, right? And so then, you know, that's where we need their help. And I promise you, when we work with HOAs, at least I can speak for myself as a lender, I am going to come in, because I know sometimes I'm a strong personality, but when it comes to HOAs, we try to come in with kid gloves with them. We know they don't want to do this. We know they're on boards just because somebody's required to be on a board. I was on one myself, right? They're not getting paid to do this almost all of the time. So we are going to try to be like, listen, I am so sorry. I know, you've got a job and you've got a life and all of this, but we just need somebody to get us this document, right? We don't care who on your board. We just need somebody. Can you work with us? Please. Just know from what Amber's saying is just because they work with HomeWise does not mean we just have to work with HomeWise. They will only give us what they've been given, and that is where the communication stops with them. So just like we said, it could start with a limited review and then turn into more. It could start with HomeWise, but we may still need to go back to the HOA depending on what those answers are.
Absolutely.
And then FHA spot approvals.
Spot approvals are a little bit different. So does anybody know what a spot approval is? No? Okay. So FHA, the one QR code that's on the first page, it goes to the FHA approved condos. So if you have a condo and you know the HOA name, you can use that website and actually see if the condo is approved FHA. A lot of times you could see that it's not approved and it was recently declined or denied it doesn't really usually give a reason, sometimes it does. If you have one that is not approved in FHA, we could do a single unit spot approval. So it's not for the whole HOA, it's only for that specific unit that your borrower is purchasing. So we need almost all the same docs that are on the full review, and it's a separate HUD questionnaire that is completed. Before you do anything, meaning we still need to be in contract, which is really weird because HUD will issue your case number, but obviously you can't get a case number if you don't already have a contract. So it's strange in the fact where
You have to have an accepted offer,
Yes.
essentially. You have to have a signed purchase agreement. The seller and the buyer have to understand that it's not approved FHA, but everybody on both sides of the parties agree that they're going to try and see if FHA will approve it.
You got it. So if everyone is willing to do that, then we go to the next step of saying we want to do a single unit spot approval. We need all of those condo docs prior to even ordering the appraisal because you won't have a case number. So everything's submitted to FHA and they'll come back and say, yes, here's your case number, or no, whatever reason. No because there's not enough on their reserve for their budget, or they don't have enough in insurance coverage. So it's just up to them, and they come back and say yes or no. We've had a lot of success with it, personally. I know a lot of lenders out there say that they don't even try to do it, but I mean, if it's a condo that our borrower wants, why not try if all parties are willing to? So,
Yes, Joanne.
So I have a question. If this is related, since it has to go through HUD,
Yes.
as we're seeing all kinds of HUDs coming from houses,
Yes.
how is that affecting timelines?
So there's
it's not. It's
yeah.
not affecting timelines yet.
Yet.
We have seen.
Yet.
Yes. And this, once again, this is only for FHA loans that I'm referring to. This is not for conventional loans. So this is only an FHA spot approval. But we haven't noticed any of that yet. Not saying that we won't, but we haven't yet.
And the biggest thing, like Amber said, I think the biggest thing is that both sides understand, one, you're trying to do something that isn't approved, right? So you're trying to get around the rules, which is okay, but everybody has to be patient, right? Because we can't rush them. We can't say we need to rush, this is really time sensitive, right? We are just on their timeline. And when they come back yes or no, there is no arguing, right? It is just yes or no, and then either the deal is done. The benefit though is the buyer is not out the appraisal or the money for the appraisal, because the appraisal cannot even be ordered until it's approved, because until they come back and say yes, we have no FHA case number, which is what is assigned at the start of every FHA loan.
So from the seller's perspective, how long is the property off the market while it's under contract, while it's waiting for this?
It typically takes, I think, a week to get that.
So once we have all the HOA docs, that could be time consuming as well. But if we have those, let's say in a week, once it's submitted to HUD, it's usually typically 5 business days at the most.
So it would
That's
be
what we
determined
would
on
say.
how quick your HOA
Yes.
gets us the documentation that we need.
Yes.
So yes, that would be the number one factor, right? Because we're going to be ready on our end, and as you know, as you've worked with me before, our buyers already have their documents. I mean, we're ready to go with my loans, right? So that part's easy. The hearing back from HUD is about a week. The thing that is undetermined is how long it's gonna take that HOA association and your seller to get the documents to us that we need for the spot approval review. Yeah. Donna.
Years ago, I had a list of FHA approved condos, and I haven't brought it up to date, but I'm sure a lot of it has dropped off.
Yes.
Is there any way we could obtain a list?
Yes, so if you go, it's a website that's updated every single month.
Oh, okay.
So you can click here, but Donna, I'm also gonna be sending an email out afterwards that has the website link, so you can literally
Okay.
just click on the link. Because I know QR codes are hard for some phones. I'm gonna send out a link of both websites so that you can literally just click on it and bookmark it in your internet, because you literally can check it, but you can also check with me anytime. So if you have a buyer that, is saying, I'm interested in a condo, you can always check. I always tell my realtors, check with me on your condo that they're interested in, and I can tell you immediately if it's FHA approved or not.
Yeah, I think the problem is that the board, a lot of them are just maybe retired people, they're not,
Yes.
educated in dealing with anything of like forms. And I think that because of that, it takes a lot of work to be FHA approved.
Yes.
And the board members don't want to be bothered with that.
Right. Yep, you're totally right.
So it's really dropping off.
Yes, FHA, you're probably looking at 15% of condos
Yes.
are FHA approved compared to
But
others.
that's where the spot approval really comes good into play. Where, yes, maybe that condo association did not want to turn in that documentation to HUD FHA, but that doesn't mean that they're not approved to do an actual spot approval. The HOA is solid, they just didn't want to fully turn in everything to FHA, so.
Which is a big difference compared to the limited documentation we would need to do a single unit.
An entire project approval, you're talking 2 months.
Yeah. Kelly, you had, or either of
She
you.
was waiting first.
Aren't there still minimum requirements like rentals to ownership as well?
Yes.
And those are some of the questions that are on
So
there,
you
yes.
want to know that before you even said, let's do
Absolutely.
You're right.
Absolutely. Occupancy concentration, investor concentration is what they call it. There's all caps on that for FHA. So if you know that right up front from the HOA, I'm not even gonna bother. Or, hey Kelly, what was the guideline on it again? Because here's where the HOA's at. Oh, they're at 23%, no. So, there are definitely some, there are some things to look out for up front if you can, but the truth is, a lot of these HOAs don't even
They don't even know.
They don't speak the language.
Yeah.
Meaning they just, you could ask them about their concentration on this, and they're like, wait, what are you talking about? So really, I think the agents, you guys are in the front lines of having to kind of do both jobs. You're kind of having to do the education and the footwork and be the liaison between us and them as well. So that's why if you ever have questions,
Just ask.
call, text, send a smoke signal. That's what we say to everybody.
So my question was, for the FHA spot approval, how common is it to get it? Does it work, or is it kind of like a long shot?
We have great success with it, as
Yeah.
Amber said. Yes, we do it quite often, to be honest with you.
We're willing to do the work.
Yeah.
And if there's those set questions that if the answer is this, like Michelle was just saying on the concentration, if you know it's gonna be 23%, you know that that's not gonna be eligible.
So can you tell them what the number is that it can't be over?
10%.
10%. So it can't be over 10%.
What we'll do as well is, because that wasn't included in our printouts, when Kelly sends you her follow-up, we'll include an example and some highlights of things to look for on an FHA, just so you have that.
Awesome. Thank you, Amber. Michelle, or Amber, I'm not sure which one of you is covering it. Can you just go over the example of the budget that we gave and kind of what we're looking for when we do need to get the financials from a condo?
Sure. So, now I'm gonna go a little bit deeper with you guys. So again, stop me if we have questions. I wanna make sure you take the most out of this. So,
And it's the document that looks like this. It's
yes, sorry, it says budget Mills Creek.
California.
So, like Kellyanne was saying, is when we're going limited or full, a lot of times that could be the difference of your approval or running into issues, okay? And that's all based off of down payment up front. Now comes the meat and potatoes of it. Let's say you have a limited review questionnaire. A limited review questionnaire means I don't need to see the financials of the HOA. So the budget's not applicable, okay? So they're putting 10% or more down on a Fannie or Freddie transaction conventional. The lender's not asking you for the budget unless they talk about special assessments in the questionnaire. So this is where those one-off nuances come in, where we've heard from agents several times. They say, this is limited, why now are you asking for the budget?
All the time.
Before I even go look at the actual transaction, my mind immediately goes to something was written in that questionnaire that's having them flag that.
I have a question for you.
Sure.
Kind of a little bit on the budget-wise and not on the FHA side. So our new-ish documents, you know, an agent can check off if they want to see the budget or other documents on behalf of the buyer. If that is in the contract, are you then requiring to see that?
Oh, that's a
If it's written in the contract, yes.
I haven't seen that yet.
We have not seen it, but if it's written in there, this is one of those things. We were on Facebook Live.
I know. We have to be limited on what we can say on camera. We can stop the camera now.
This is one of
We
those
will be
things-
here after it's done for Q&A on camera.
This is one of those things of,
Question I couldn't hear her.
Yeah, her question is, so on some of the updated realtor documents, correct me if I'm wrong on what your question was, she said there is a spot that as the buyer's agent, when you're putting your offer in on the contract, you can say, as the buyer's agent, we would like to see the condo's budget or see their bylaws, etc. So her question was, if we check off as the buyer's agent on the contract that we want to see the financials of the condo, is the lender required to then see that as well and ask for it? And the answer is yes. And before she gets into this, I just want to give another example because this is a really great question for multiple things. So I had a recent client that just closed a loan, and her agent is awesome. I work with her all the time, and she loves protecting her buyers and taking care of them. So she has a contractor friend who does mold and water mitigation to come in during the home inspection and just check to make sure that there was no mold or water leakage in the property. Now, there was no reason to think there would be. She was just doing it to be proactive to protect her buyer, right? Now, we don't need to see that. If they allow a home inspector in, her friend could have gone in with the home inspector as well and gone and checked for that. The problem was on the contract, she added in on the special comment section also a mold and mitigation specialist to come in and check the property. So as soon as I got the signed purchase agreement, I saw it and I'm like, hold, and I called her and I was like, I can't tell you what to have on a contract. All I can tell you is that if it has to be on the contract and we see it, we have to ask for the report. So you actually have, and it was a structural engineer too, like to check the foundation. She was gonna have to pay for a structural engineer to come in. We were gonna need a copy of the structural certificate. So you only want to put on a contract what you want us to be aware of and ask for. Because if it's on the contract, we are required by law to ask for it. Now, I am not a real estate agent. I'm not a broker. I don't know real estate law. So I advised her, here is what we know on our lending side. Now you need to go to your broker and ask them, because I don't want to not protect a buyer, right? So you need to ask your broker, can this person go in with your home inspector and just check on it for her, or does it need to be on the contract? Because if it does, right? So she went and talked to her broker, it did not need to be on the contract. So they got us an updated contract where that wasn't on there, and then poof, we don't need a structural engineer certificate, we don't need the buyer to spend $500 on somebody coming in. So anything that's on a contract, we are required to ask for. We can't get around it because it's on there. We are required by law to have it. So you only want to put on contracts things that you know have to be on the contract. Anyway, go ahead. Great question.
It's a great question.
So once we're done with the seminar after that, then we'll stop the video and answer any additional questions people have.
So basically, the budget isn't always required if you're going limited, but if you have someone that asks for it after the fact and it's still a limited project review, you have to assume you're gonna wanna say, were there special assessments mentioned, where they're calling back in the review of the financials at that point. So a lot of people will say, well, they're putting 10% down, you don't need that. Well, unfortunately, these questions provoke me to ask those other questions. Trust me, I don't wanna review more documents, I promise you.
Yeah, we want to see as little as possible.
So just to simplify this piece of paper with all these numbers on it, guys. So this is a budget, okay? And whether you're limited or a full review budget, all they're looking for on this whole thing, essentially, is that you're meeting a 10% contribution requirement to reserves, okay? So on the very first line, you have assessment income. The second line is reserve assessment. Does everyone see that? It's $64,800. That means that they are allocating $64,800 into a reserve account. Okay, well, how do I know if that's 10% of what you need it to be? It needs to be 10% of the total operating income for the project. So the total operating income for this project is $164,097.15.
So if you circle that number, put a line next to it and be like, that's the number you need 10% of in their reserves.
Which means that the $64,800 is just covering the 10%. You've met that requirement by a smidge there. So this would be an acceptable budget for a project review. Does that make sense? I know it's a lot of numbers and goofy things.
So one of the things, if you know, like when you're having a listing and you know that you're most likely going to need to show a budget, this is what you're wanting to look for, right? Because the second a lender has to see the budget, that 10% is a government guideline requirement. So when I had a condo that I owned, okay, when I came in, my husband graciously nominated me to be treasurer of the condo association because he wanted to know everything that was going on inside of the property, right? So I was like, thank you, sweetheart. So 6 months later, after I was handed the napkins and individual cases with like passwords of bank accounts on them and got all of it organized, I realized that this condo association that we had gotten into had transferred their HOA treasurer and president like 6 times in 4 years, and nobody knew what the actual expenses were of the condo. And we were actually, luckily enough, when they started the condo business, the LLC, they collected enough in reserves that it didn't kill them of the fact that they were requesting $30,000 less than what they needed to for their operating income every year. $30,000. So I immediately, as the treasurer, and now mind you, this is going to affect me as well, have to do this very large assessment because the condo collapse had just happened, and as a lender, I knew if we ever wanted to sell our property, we were going to be required to show that reserve requirement, and we did not have it. And so we had to do the assessment for all of the owners to then pay that money to make sure we got our budget back on track, and we had to increase the HOA. The reason they are doing all of this is because it was let go of being watched and regulated for so long that all these condo associations have just gotten very lazy and have not been paying attention to what they should have been doing from the start. And so even though it's not great, it really is beneficial for your borrowers and your buyers that this is happening because it's protecting them from going into a situation where they're not going to be able to sell the property, or that there's a safety issue that they're not aware of, or things like that.
Yeah, and in summary, I think the biggest things as an agent or a lender we look at is we want to make sure that the structural integrity, safety, and soundness are intact. That's a big red flag of what anybody looks for. It's the structural integrity, significant deferred maintenance. They want to make sure that these condo projects are maintaining the properties appropriately. And I'm not saying putting in a spa,
Right.
but I'm saying at least the bare minimum you know, making sure that they're being maintained appropriately.
That you're not gonna have an electrical fire throughout the whole
Right,
unit.
and
you
that
know?
they're financially handling it appropriately to make sure they're doing their routine maintenance and that they're in a financially sound manner to do so. Because what we learned from the condo collapse is that they weren't budgeting enough to make repairs and stay up to date on certain codes, and then,
People died because of it.
yeah,
A lot of people.
because it's too late after a certain point. You know, if the structural integrity is compromised, it's a tear down.
And
So
I
it's
think-
all of those things in general. It's the special assessments, it's the pending litigations on, hey, is the condo being sued because of all the roof collapsed in a unit? I mean, I've seen that before. You know, the structural integrity and making sure that they are budgeting properly. So I think those are the key factors for takeaway. And then, you know, a lot of this is, it's a lot of paperwork, but if you can remember those key questions, that at least gives you enough knowledge of baseline to come to Kelly and ask more questions, or ask your sellers or the companies those questions.
Yep. And then, just in closing, and then we'll stop the Facebook Live and ask, you know, Q&A, et cetera. But with your condo buying, so the last page before your notes in your booklet, I think the biggest thing when you have a buyer that's saying, well, I want a condo, right? I think the biggest thing as a realtor that lenders would appreciate you doing, because we want to support each other, just like we'll give realistic expectations to your buyer for you, it's helpful as a realtor to help your lender out in making sure they understand, like, okay, well, a few things that are important to know. Condos are gonna have higher interest rates of loans than, so if you have a person buying a single family home conventional versus a condo conventional, condo's gonna have a higher interest rate. People ask why? Because they're the highest risk factor property, right? For the reasons that we just talked about. Other people and other issues can affect the safety and soundness of your structure. The other reason they're high risk, like in the example I gave, I bought a condo where we came in, the HOA fee was XYZ, and then all of a sudden it almost doubled within 2 years, right, to the new amount. You could have a buyer who comes in and they're at their max ratios buying this condo, and then all of a sudden their HOA goes up $100 a month and they default on their loan, right? So it's a high risk purchase. So it's important to understand and tell them, just so you know, when you buy condos, there's benefits, right? Here's the benefits. So I have this flyer that I have for realtors to be able to use so that you don't have to explain it as much as I can, right? But, you know, all the exterior work is maintained for you. If there's a roof issue, you don't have to get a roofer yourself, right? Like, they have benefits like pools and spas and, you know, whatever it is, right? But some of the disadvantages are the things we just discussed, right? Your HOA fees could change, which could change what you can afford, or if you can even afford to stay there. You know, other people are going to tell you what you can and cannot do with the property that you own. You know, things like this. Your interest rate might be higher, so your payment might be higher than on a single family home. It's just knowledge to show the buyer that you know what you're talking about as a realtor, to give them confidence in you as a realtor, and things like that. So I think it's just important to let them know, and especially if you know you have a VA, a USDA, or a VA client, and you find out that they're interested in condos, having a very realistic talk with them of there is very limited availability, but I love your lender, and I know that she will work with us and tell us exactly. I mean, you tell me the county, I'll tell you the places that are eligible, right? I can give you every single condo development in the county the buyer's looking in, or in multiple. I had one agent that was like, here's the 5 counties they're open to moving to. Can you let me know what condos are on the approved list? So, you know, we're here to work together as a team, and hopefully after today, my goal is that you just feel like you have more knowledge and understanding of condos, buying, selling, what's needed, and just know that we're here to help in any way that we can. So thank you guys so much for coming today. And that'll be the end of the presentation. I'm gonna end the video, and then we'll be around for Q&A.
Thank you.
Give me a second. Nope, we're still live.